Welcome to the Rick Helps Real Estate Show. Good morning, Jackie. Boy, it's supposed to be 96 degrees today. Here it comes. Those of you that live in the desert here go, oh boy, here it comes. We usually always hit our first 100-degree day in May. So this year is going to be interesting. Are we going to punch it out in April? I hope not. But 96 degrees, that's unusual. So what's going on here in the real estate world? Well, for one thing, in Arizona, we're not seeing any more new listings coming on. Look at this. According to this, is 12,591. These are updated on a Saturday. John Hall says in 21-23, there were more than 2 times the normal amount of investor buyers. I think they increased prices beyond normal, and price will eventually correct after the price stickiness wears off. Well, that's the big elephant in the room. Everybody's looking at that. Investors have definitely pulled away from our market because they're not seeing the return here. They've gone to other states. And Tech from the Top, good morning. But you can see here that listings are just not showing up, and we're back to 2020 levels here. And then you can see that they fell off, started falling off, especially during the pandemic. And then, we got way down here. Shows here 5,201. I don't see that coming again. But you can see here that in 2022, when the rates went up, we got up to a high of almost 20,000 listings. And then poof, they came running back down again because rates went up fast and high. So that's what we're facing. So the sentiment that's out there, this one's interesting. And this is from Fannie Mae. It's saying most Americans say it's a bad time to buy a home, according to Fannie Mae, and here's why. And one of the things that Redfin here says, low inventory is dragging the housing market as few sellers are willing to give up low rates, hence pushing the number of new listings in the market down. And we've talked about that forever. We call it rate lock. On Thursday, Redfin said that new listings fell 21.8% from a year earlier for the 4 weeks ending April 2nd. The drop is one of the biggest since the start of the pandemic. So in other words, it dropped from last April. Let's see, when was last April? If I can find it here. That's not it. So right about, I don't see where we dropped from last April here. So anyway, that's not worth dissecting. Consumers are still wary towards home buying. This one is the interesting one, folks. Fannie Mae's monthly survey of consumer attitudes towards buying or selling a home in their own financial situation showed a mixture of sentiments in March. The Home Purchase Sentiment Index, the HPSI, there's more acronyms in the government than anywhere. It's derived from 6 questions on the National Housing Survey. It rose 3.3 points, which brings it slightly higher than its all-time low of November last year. And November last year was bad. It's down 11.9 points compared to last year. So look at this. This is the support index, and it's saying that people out there are saying, well, I just don't feel like it's a good time to buy a home. Only 20% of those surveyed said it was a good time to buy a home, which is 79% disagreed. The 60% net positive, 1 point lower. This is just confusing as all get out. But bottom line is, you look at the chart, the majority of the people think it's not a good time to buy a home. So where do we go from here, right? And Sean says, I don't think the problem is now investor buyers. I think it's 70% of people with 2% rate who will never sell those houses, keeping inventory low. Yeah, investors are gone. They drove up competition. I agree with you there, Sean. They made it, the average person buying made that a little bit harder. And Cromford Index touches on that. Cromford people touch on that just a little bit. I'm going to show you in a second here. I'm going to add to our international audience. I'm an Anthem resident currently residing in Saudi Arabia. Holy cow. Is it 96 there? Let's see. We had Albania last week. You guys are great. So what does Tina Tambour say from the Cromford report? She goes, talking about inventory, perhaps owners of short-term rentals will tire of that business. Interesting. Now that occupancy rates are down from a year ago, and they are down, but many owners were disappointed with their receipts from the Super Bowl. We seem to have an excess of short-term rental supply, which means owners are having to compete with each other on price for short-term rentals. As we head into the new season for holiday rentals, we may get some sold off. More likely, they will be converted to long-term rentals where the rental prices are much lower, but the percentage of occupancy is likely to be much higher. Demand for long-term rentals is generally more reliable and consistent. So in her view, yes, they'll probably see some short-term rentals being sold off because we didn't have, I got the wrong photo up there. We didn't have a lot of activity in Super Bowl. I mean, we did, but it didn't meet expectations. So Cody here says, what do you think about buying a home serviced by Global Water? You know, Cody, I don't know anything about Global Water. Where are they located? I know that Epcor is expensive and they're out of Canada. They serve like Queen Creek, Santan Valley, Fountain Hills, Anthem. And they're trying to work something out now in Rio Verde, but they're expensive. I don't know anything about Global Water. So going back to these short-term rentals, she does make a comment here and says, if I owned a short-term rental property with disappointing occupancy rates, she says, I don't. I would wait for higher prices before considering selling. So converting to a long-term rental would be my first step. So it would take a mass exodus of short-term rentals for us to see a big increase in inventory in our market. Unless you get up to areas like Sedona, where Sedona is incredibly oversaturated. Saturated. I'm going to fill this back up again. Oversaturated with short-term rentals. I believe they have over 1,000. There's only 7,900 people that reside in Sedona. So it's that market could use a little bit of selling here. Jackie, we have a comment here from LJR. Everybody's waiting until May. That's when Barry Habib said rates will decline further. I don't think everybody is. I just think the people that are closely following the rates are. I mean, I agree with you in substance there, but your average seller is not following the market like that. Your sellers right now are reading all the data that's coming out about January, that January was slow. I had a video come out last night and I was reading an article about saying that sales are down, prices are down 5%. Well, they were in total of last year. So some of the people that are out of state or not following this market think that right now our sales are down 5%, prices are down 5%. Reality is since January, we're up 5%. So we're not down. But if you're just passively looking at real estate, you don't know anything about a possible rate decrease in May, according to Barry Habib. Jackie weighs in on the water. They've been around like 20 years and never heard of a complaint. Great. I appreciate that, Jackie. So if you ever want to know a lot of stuff, ask Jackie. She's been selling real estate for 33 years. Check this out. This is number of price changes per week. They're coming down. Now, what is that significant? Price changes mean that people, had maybe lofty expectations about what they could get, like back here. Oops, that didn't work. I need to reduce my price. And we're seeing less and less of that as we go forward. We're back down to same levels of price reductions as we saw here in May of 2022. So the price reductions are not going up, they're going down. This is the one that I'm curious to watch. And I think by the time next month and the month after that rolls around, we're going to see less and less seller contributions. This is the number of seller paid concessions here has dropped to 46% from a high of 51% with the average of 9,000 coming down slightly. And this is the percentage of homes, again, 45.9%. I think based on what we're seeing right now with inventory as low as it is again, and sales, I'm not going to show you the 7-day moving average because Easter's, kind of put a dent in that. It went down. Our sales are still about 3,200. But my point is, we saw a lot of seller paid concessions, sellers paying to help you buy down your rate. That's starting to vaporize. because there's enough activity out there from buyers to where you don't have to pull them in by offering incentives like you had to back in November, December, and the beginning of January. Everybody's saying, well, in order to compete, I'm going to have to hand them something. Now, if you're going to list, it's less likely that you're going to have to pay seller concessions. Buyers will ask for it because remember, I keep saying there's a disconnect in buyers and sellers as to how the market is really reacting right now. And they're going to be looking at January numbers again. Case Schiller, that's the one that makes all the news. It's going to be another month before that gets revised. And basically the market out there says, oh, I didn't get the memo. So there will be people asking for seller concessions. Don't get me wrong. But I think as a seller, you can list your house now and you don't have to go ahead and say in advance that you're going to offer seller concessions to get people interested in your home. So don't give that away early. Wait and see what kind of offer you get and what they're asking for, and then negotiate it from there. But the days of having to put here, I'm listing my house and I'm offering you $5,000 to buy down your interest rate or $10,000, you don't have to. I think that market is behind us. Sean here says, let's see. Open Door's latest offer for my house is $10K higher than last month. Is that an indication of the market direction? Boy, I don't think I'd use Open Door's offers as any general direction. They certainly prove they're off the mark there. They are offering more than what they were willing to offer you a few months. They didn't even, I think they only bought like 20 homes 2 months ago. And they're down to less than 200 homes on inventory now. So they're trying to gobble up a little more. Investors are still very nervous about Open Door. But I don't know. I mean, it would seem odd to me that they would start increasing their pricing right now, unless they're just really having a difficult time getting people to bite. The market is strong enough to where you don't need to go to Open Door now, and their prices are not that attractive to where they're beating everybody else out. You still have the advantage if you don't have to show your home. You can pick your closing date. All of that is still there. I don't know what their fees are today, though. I don't know what they're charging. They charge a service fee, which has gone anywhere from 7% down to 3%. But I don't know where they're at now because I only know on the buying side that you're not going to get the deep discounts that you once did. And the discounts were deep only because they were asking obnoxiously high prices for their homes. I mean, they were off the charts. Just, hey, we want $500,000 for this home. Well, I'm happy for you. It's not worth a dime over 410. Now, investor traffic, investor offers are much lower than they were last year and the year before. And they're coming in at about 65% of the retail value. So getting an offer from an investor, if you have a home that needs to be fixed up, it's not going to get you the number that you hope for. And that's probably good if you're a buyer out there. You really want them to tamp down. So they only want to buy junk, and they want to buy junk that's really bad so that they can fix it up. Open Door doesn't look for junk. Open Door just will buy anything and go in and say, well, what's it need? Let me paint this. Let me put some new carpet down. That's about as much as they want to do. They really don't mess around with new countertops unless they absolutely have to. They will replace lighting fixtures. I've seen them do strange things where you walk in and got a beautiful new ceiling fan. As soon as you walk in, it's just gorgeous. And you go in the kitchen and they've got the old one from 1973. I don't know what they think of. Jerry says, with so many factors that could affect listings, the one statistic I haven't heard lately is the number of people behind 60 or 90 days. Is it low, high, or normal? I can show you. That would show up as a pre-foreclosure. Let me see if I can find that here for you real quick. And that's foreclosures pending. And it has been, Jerry, at historic lows. And my chart is historically blank here. So let me see if I can pull this up. Another one. There's monthly. Okay, here we go. I pull it up. It's sitting there spinning and it goes, boop, nothing there. So here we are. This is where our foreclosures per month are happening. They're down to like 37. So these are notices of trustee sales. You can see there's 306. These are people that have already gotten the letter that said, you're 90 days late, we're going to have a trustee sale. Out of that, only 37 of those had to be sold. Your average homeowner's got too much equity to hand it back to the bank now, Jerry, and they're just not doing it. And that number's not budging. You go back to the crisis mode here. Look at this. 10,000 notices of trustee sales and 4,781 a month. Now, back here, we had 58,000 listings compared to, what are we saying in a ticker here right now? 13,498. Pretty low for a Monday. We will get down. I'm going to say we're going to be at the high 12,000 range by Wednesday because it whittles down the week and by Thursday and then pops back up on Friday. Sales are still hitting around 3,200. So, foreclosures, not still a great big nothing burger. Here's an interesting thing I bumped into this morning because, I get up, have my coffee, start cruising around, looking at the news. And Los Angeles-based Flyby Robotics launching food delivery via drone in the East Valley. Jerry's got another comment here that says, I'm not expecting foreclosures, but thinking people may list before foreclosing. I agree. If they get in financial bind, I agree. You're absolutely right there. They will list. But with so many of them being at the 3% mark, it's going to have to take not only a job loss for them to list, but it's going to take a glut in rentals. So if you're sitting in a house, 3% mortgage, and you're in a pinch, you've lost your job. You still got to live somewhere, right? So you may list your house because you need the equity, or you may put a renter in. So, those are unanswered questions that everybody's sitting around waiting to see what happens. So this is interesting. Flyby Robotics is launching food delivery in East Valley out at Val Vista Lakes. But here's what kills me. They're launching via drone has arrived at Val Vista Lakes neighborhood in the edge of Gilbert and Mesa. Well, what kind of food are they delivering here? During the pilot, customers can order smoothies from Nectar Juice Bar, salad from Man Greens, or sushi from Tokyo Joe's, and crunchy shiitake mushroom chips from Papadelics for a $3 delivery fee. So I don't see myself sitting at home and going, God, I could use a smoothie. Let me have that flown in. I don't get it. I know they're practicing to deliver food. So I also don't want to see drone delivery. Most of these neighborhoods are quiet. Drones are not. They sound like bees. You get a bunch of food delivery drones flying over your backyard when you're sitting out trying to relax. Not my cup of tea. So we're thinking like, thanks, Jerry. It's a rare moment, huh? Cody says, does global water mean the water is trucked in? So I'm going to have to defer that to Jackie. So I don't see the food delivery or package delivery by drones being the next big thing. Look, I can get things delivered to Amazon in one day. Do I really need it in an hour? Maybe somebody does. Something broke. They have to replace it. But that trend, I don't know. I don't get it. So I just, I've been an Amazon fool lately because I'm getting ready for my trip. So I'm finding all these things that I want for my RV to make travel easier. And I can buying stupid things like, hey, I need a new bath mat. So the Amazon guys, we're almost on a first name basis here at my place. So that's what happens when you do that. Happy Monday, Stephanie. Welcome to the party. So that's what's going on as far as the market now and inventory. So we're going to wait and see. I think is the CPI data coming out tomorrow? I'm going to have to take a look at that. If that's the case, that could be very interesting on rates because as you see, our rates right now are just kind of flat. They're staying level. They're not going nuts. They're not really moving much on news. And it's those damn millennials. Yeah. Hey, you guys are out of control. Hey, good luck on your upcoming listing here. Make sure you let us know the address here so we can let everybody know on this show where it's at. After hearing about it for a couple months, I'm curious to see what it looks like. So everybody have an absolute fabulous Monday. Hope you had a great Easter. See you again tomorrow. Take care.